Welcome back. You're watching Buy Now Sell Now on ET Now. We have our experts, Kush Bohra as well as Rajesh Agarwal, to take all of his stock-related queries. Remember, viewers, you can write to us on the number that'll be flashing on the top of your screen. And each time you write to us, mention your name, the stock that you're looking to invest in, mention that as well, and the buy price, the quantity and time horizon in case you've already purchased the stock and it's a part of your portfolio. In that way, we will be able to guide your query better to our experts. And let's kickstart taking all the stock related queries then. And this one is coming in from Chandni, who's written to us from Noida. And she wants to know if she can look to buy stocks from the battery space right now, that is like Amara Raja, or for the matter of fact Exide Industries, and also wants to know what sort of a top bet or top pick you have in that space. Rajesh, what's your take coming in, given the fact there's a lot of action in the battery space, Exide, now Amara Raja, everyone wants to look at it, and both these stocks have had their fair share of rally based on news flows and the development going in that space. So what's your take? Do you think now is the time to venture in this counter, or should one wait for the right opportunity?
See, if you are an investor, I think every opportunity is a right opportunity because you're going to time the market. Today, Amara Raja is trading at around 1,600 odd rupees. For some reason, if the market corrects, it can go down to 1,500, you never know. But waiting for that to come, and then again, you see that the price has gone to 1,800, that would be a very painful experience. So it's better if you're a long-term investor, go ahead and buy. If not in a lump sum, you can buy in small tranches. As far as picks are concerned, both of these stocks, Amara Raja and Exide, are in our buying list. Not only because there are large players in the OEM segment, the auto space is doing very well. Every month we are seeing new launches, new auto numbers coming in a very exciting manner, and this is helping the entire industry as far as batteries are concerned. Exide, there are news of moving into EV space, and that's one of the fascinating news. And as far as Amara Raja is concerned, with the change of guard on the center and government changes and all those things, we have seen a stupendous rally in Amara Raja. So in Amara Raja, I would say wait for some amount of correction to enter. Stock is very good for long term, no doubt on that. But at this point of time, it's a buy on Exide and buy on dips on Amara Raja.
Buy on dips on Amara Raja batteries. What's your take, Kush? Do you concur with what Rajesh had to say on both of these counters? Are they also in your buy list, and what are the charts throwing up?
So incidentally, Cheryl, just as a disclaimer, Exide was our buy call just this morning with a second target of 605. That was overshot, and then the stock is now seeing some sort of profit booking. I do concur with Rajesh to an extent that both these stocks have done phenomenally well. A minor difference here would be, in my opinion, is that both these stocks right now, if you see on the weekly setup, have gone into overheated territories. Exide a bit more than Amara Raja. So both of them, while on a very firm footing, are actually buy on dips. So about 1,500, 1,550 is the level to watch for. Anywhere close to that on Amara Raja should be a good entry point. As far as Exide goes, 550, 555 kind of zones should be a good entry point. So both these stocks, have done phenomenally well, will continue to do well. It's just that both of these are now a buy on dip setup.
The next query is from Mr. Satyavani, and from Visakhapatnam. He's a senior citizen and a long-term investor. Rajesh, so the query is for you. He wants to know two best green energy and power stocks at current prices for the next 1 year.
See, almost all of the stock have run quite well in the recent past, but as far as picks at this point of time in the entire space is concerned, I think CESC on valuation parameters is standing on a huge discount to its listed peers. They're trading at around 10-12 times earnings. I think this stock in the power sector can give you very good returns going forward if one holds for 12 to 18 months. And in the green energy space, I would recommend Tata Power. Yes, it has run up quite a lot, but still with the kind of projects it has in renewable energy space, EV and all those things, and not to forget it's one of the largest players in the private sector, I think Tata Power can still move up to around 500 odd rupees in the next 1 year.
With the Tata Group of Company then, this one is coming from Partha, who's a senior citizen from Kolkata, wants to know about Tata Motors. 50 shares bought at a level of 1,002 rupees per share. Kush, he wants to know whether he should average it right now. He wants to keep it for the long term. What's your take coming on Tata Motors? Above 1,000 rupees per share is the buy price. Isn't it too steep a buy for Tata Motors? But what's your take? You think you should average or just stay put with the holding and wait for the stock to come back to those levels?
I have a feeling you can partially answer this question, especially because the averaging bit comes in. No, but honestly, right now the stock's in a bit of a downturn, and only from a near-term perspective. So averaging, still not warranted. Maybe when the stock turns around, crosses the 975 mark, and the resistances are taken out, is when you can consider adding some more. From a near-term perspective, I don't see too much of a worry. Although, as I said, the stock is in a bit of a downturn. 930, 935 is a strong support zone. If that is held, then the stock could consolidate sideways and then make a run for higher levels. You're right when you say that the 1,000 level or slightly above that, the buying is on the slightly higher side, where the stock's not been able to hold on to those levels. But given that he said that he's a long-term investor, I think you could continue to gradually accumulate this stock, and if it's anywhere more than a year, 2 years perspective, then I think you can see positive returns on Tata Motors. So the setup is fairly constructive. The stock's just consolidating. You should take this as an opportunity to accumulate more going forward.
Well, the next query is from Sushila and it's on India Bulls Real Estate. She holds around 450 shares, bought at a price of 113. Should she continue to hold or exit? Kush, what would be your view here?
Book partially. We are bullish on the stock. It's seen very good momentum, but it's just that for the last 2 weeks, the 160 levels proven to be an elusive one, in the sense that it does go to that level, but doesn't sustain above that. So not a bad idea, because the buying price is 113, fairly decent profit that she is making at the moment. To book partially, hold the rest, and here your stop loss will come in. Your trailing stop loss rather will come in at 145, which was the previous resistance. Now will act as a support zone. On the upside, if this momentum does continue, you can also look at 180, where you can exit the rest of the quantity.
This one is coming from V. Murli, who's writing to us from Bangalore. And this one is for you, Rajesh. She wants to know and try and understand the impact of farm loan waiver announcements that's come in from the states. I believe it is Telangana government. And he wants to know about Credit Access Grameen in particular. What's your take coming in on that? Should one actually read too much into such a move coming in from the state governments, given the fact that the stock also has seen some sort of a decline over the last 2 to 3 trading sessions?
Of course, yes. I think these kind of stock in microfinance and village financing, farmer financing are going to be affected because of these kind of announcement. We have seen what has happened to Bandhan Bank when in Northeast Assam and all these waivers were given. So the stock is still languishing, almost 20-30% from its all-time highs. So it's better to avoid these kind of stocks at this point until some clarity emerges. So there are many better names in the microfinance industry. Maybe a Satin Credit would be a better choice than Credit Access at this point of time, or even a Spandana Spurti.
From Padma Siva Rao from Bangalore, and she wants to know at what price can she buy Gail for say 6 months. The stock has been going down, so she wants to know the buying price for Gail. Kush, what would be the buying price, and would you in fact advise to buy Gail?
Well, Gail is on a good footing, and if you go by the recent past, then the 20-day moving average, although it does act as a support but not a strong one, a more meaningful support is at the 50-day moving average on the daily chart. Now, where does that level come in at the moment? It comes in at about 205. So if you're looking at a good entry point with a favorable risk reward ratio, then I think you could wait for the 205 level to come around. Buying closer to that, as I said, will give you a much more cushion, or rather a better risk reward ratio. So 205 or close to that is where a good entry point for Gail will come in. From there on, a stop loss just below 200, perhaps a 198 is a good stop loss to have. On the rebound, you can again look at 215 and 225 as your targets. To wait for a minor dip close to 205, that's where you can perhaps consider entering Gail from a 6 month perspective. From a 6 month perspective.
Coming in from Vignesh from Vellore, he wants to know about Lakshmi Organics. He already has it in his portfolio at the price of around 275 rupees per share. Apart from that, he also has ESAF Small Finance Bank. No, he wants to make a fresh entry in ESAF Small Finance Bank. So, Rajesh, firstly, Lakshmi Organics, if you track this one, how is this one looking to you fundamentally? And ESAF Small Finance Bank, does it make sense to make a fresh entry at these levels?
See, I think the gentleman is very lucky. He's holding at around 275 odd levels. I know people who are holding the stock from very high levels. All said and done, the industry is trying to make a bottom, and things are looking better going forward for the entire chemical space, I would say. So it's time to add to Lakshmi Organics. Maybe in the next 2 years, you will see phenomenal numbers coming in. So I won't be surprised if it gives a 20% CAGR return to the investors. As far as PSAP Small Finance Bank is concerned, I think it's better to avoid at this point of time. The numbers have been not that exciting. In the entire space of the small finance bank, we would recommend only AU Small Finance, which is on a better footing on all parameters. So it's better either to avoid small finance bank, go to the larger banks like SBI or Kotak or HDFC Bank or in smaller space Bank of Maharashtra. Or if at all you are looking for a small finance bank, go for AU.
That was the view on Small Finance Bank. With that, let's slip into a short break and we'll address more of your queries post that.
But let's continue taking then our stock related queries then, and let me get back to it. This one is coming in from Mr. K.R. Balan, and he is back writing to us after a 3-month break is what he's mentioned. So welcome back, Mr. Balan, and he wants to know whether he should continue to hold or exit out of Maruti, where he's making a 20% plus profit, PVR, where his buy price is 1,350 rupees per share and the stock is around those levels. What's your take coming in on both of these counters? Kush, what should he do? Book out of Maruti, you think, or just stay put with it?
Well, Maruti, stay put because, the stock's just taking support at the 20-day moving average. We've seen some consolidation and, we've seen this pattern time and again in the stock where it gives you a breakout, spends time consolidation with a mild, negative bias, then, gives you a spurt once again. So I think it's in that phase where it's consolidating, the bias has turned mildly negative, but I think, it could, spring a surprise, anytime. So I think Maruti is a stock where, you could very well stay put. PVR, on the other hand, not too constructive. The stock has formed a base. It's attempting a revival, but that 1450, 1500 mark seems to be like a tough resistance for it. So any kind of opportunity that you get, to book some profit, it will not be a bad idea to take some money home and, exit out of PVR.
The next query is from Srinath from Chennai, and it's on Bharat Electronics. He has around 1,000 shares of this company, bought at a price of 290. He wants to know whether should he book profits or hold out for some more time. Any short-term targets that you can give for the same Kush?
Well, from a near-term perspective, it will not be a bad idea to book partially. Take some money off the table. You said 290 is the buying price. I think he's making a decent, short-term gain on this one. So book partially, hold the rest with your buying price as the trailing stop loss. So that will actually put you in a good stead. Now, the key resistance for this stock is the 320 mark. Once that is taken out, I think 335 is the next immediate level that the stock could run to. But there is a possibility that the stock might spend some time. We've seen a very sharp recovery from the June 4th lows, so it might spend some time. So a good idea would be to book out partially and hold the rest with a trailing stop loss of 290 for the levels of 335.
All right. This next query is coming in from Atul Saklani, who's writing to us from Dubai. And this one is for you, Rajesh. He has 20 shares of Tata Technologies at a price of 1,033 rupees per share. He wants to know whether he should stay put with this or continue to stay put with this or look to exit. What's your take coming in on Tata Tech? Do you think it's too early to take a call of exiting this particular counter, or do you think that he should rather take the plunge then?
See, despite being a great company, it has underperformed the market in the recent, after its listing, I would say it listed around 1,400 odd rupees and now it's languishing at 1,000 odd rupees. The numbers somewhat had not been that great. Some tie-ups with some foreign partners have not gone well. But going forward, I think this is a company one can hold for a long-term portfolio. And not to forget that when interest rate starts going down, IT companies are going to do well. By interest rate, I mean the US interest rate. They start going down. The IT companies are going to do well, report good numbers going forward. The order inflows have been good. So if time is not a constraint, I would say continue to hold. And for if by any chance it goes down to around 900 odd levels, that would be a good level to add.
The next query is from Sudhir, and it's on LN Electronics. Rajesh, have you tracked this counter?
See, LN is basically a contract manufacturing company, I think, and they are doing very well with the focus of the government on Make in India and all PLI schemes. This company is going to do well. So maybe one can continue to hold this.
Okay, this one is coming in from our viewer who's written to us. Parveen has written to us. He's writing to us from Mumbai and he wants to know about Zomato. He wants to enter the stock but wants to know what's the suitable price for this particular counter and an entry point for Zomato. What's your take, Kush? I think a lot of them have been hoping and waiting for that suitable entry point, but the stock has seen no stopping.
Well, I think they missed the boat by just a couple of days. The stock did actually, go all the way from 205 to about that 175 mark. But then that's what happens, right? I mean, once the stock starts, a near-term downtrend also becomes a little difficult to, get in. The confidence gets shaken a little bit, so that's understandable. I think, a good level to wait for is 192. Multiple support zones coming in at around that level. The stock is perhaps trying to break out beyond this 200 mark. If you get a couple of closings above this, then it might be a while before you get that 192. But if in case in this consolidation you get the stock close to those 192 195 zones, that should be a good entry point from a near term perspective, where 185 becomes your stop loss, and then you hold on to the in this stock for about 225 kind of levels.
Nishi from Bangalore, and it's on Dixon Tech. She has bought few shares at a price of 3,854. She wants to know whether should she book profit or stay invested. Rajesh, what would be your view here for Dixon Tech?
Book profit. Although the company is very good, no doubt on that. PLI schemes are helping a lot of new orders from laptops too. But still the valuations are too stretched. 3-digit P, I don't think is going to sustain in the longer term. So it's better to book profit and switch to some other company.
All right, this one is coming in from G. Krishnan. He wants to know about King Infra and Patel Airs. I think he messaged us yesterday as well, but I don't think you track both of these counters, Rajesh. King Infra as well as Patel's Air Temp.
I don't know, Mane. We don't track this.
All right. Let me take this next one then. This one is coming in from our viewer, Neeraj. He wants to know about Atul Auto. He is holding at the levels of around 610 rupees per share. He wants to know whether he should stay put with this or look to exit. What's your take coming in on Atul Auto in particular, Rajesh? Because this one also has seen a lot of action on the stock price movement when you talk about news flow as well. What's your take on Atul Auto? Does it make sense to exit so early?
See, if you don't need money, you have no time constraint, continue to hold. This is a good company, three-wheeler space, doing very well. Numbers have been okay-ish, I would say. But valuations are comforting. You can continue to hold. If it comes to around 720, 750 odd rupees, that at that point of time, one can consider profit booking.
Well, the next query is from Jagdish from Bangalore, and it's on firstly on Tata Steel. He has purchased few shares at a price of 180, and Bharat Dynamics bought at a for Bharat Dynamics he hasn't mentioned the price, but he wants to know whether should he continue to hold both these counters or sell them for long term. Is it a good time to is it good to hold both these counters, Rajesh?
See, one is Bharat Dynamics, and what was the other one? Hello.
Tata Steel.
Tata Steel, right. Yeah, both of them can be continued as a long-term holding. Coming one by one, Tata Steel has a strong, a very large capacity. I would say they are doing very well. The only thing they face problem from the European operations. But I think going forward with the kind of demand we are witnessing in the entire infrastructure space, that's going to help steel business as though in the domestic market. Domestic numbers have been good. Continue to hold. If it falls to around 160, that would be a level to add to. And Bharat Dynamics, with the kind of order book it has, with the kind of focus of the government in the defense space, I think at least for the next 2 years, the companies are going to do well, not only Bharat Dynamics, but other companies in this space too. So continue to hold both of them.
This one is coming in from Sridhar from Coimbatore. This one is for you, Kush. He wants to know about DLF, which is purchased at a level of around 880 rupees per share, and the other one being Chennai Petro, which is purchased at a level of around 990 rupees per share. For the short term, he wants to know what's your take coming in on DLF as well as on Chennai Petro.
Well, both these stocks are in a bit of a downturn below the buying price, but again, these stocks are close to the support zone. So for DLF, that support zone comes in at 800, 810 zones. My suggestion would be keep a stop loss at that level. If that is taken out, then you're better off exiting. From a medium-term perspective, however, our view remains a little bullish on DLF. 900 is also a level that the stock can retest in the coming days. But the near-term pressure, if 800 is broken, then perhaps slightly lower levels can also be seen on this one. So hold with a stop loss of 800. As far as Chennai Petro goes, the stock is attempting to take support near the 50-day moving average and the 20-day moving average. They converge around this 945 mark. The momentum is missing here, so you might be tested for your patience. So hold on to this one. The stop loss here will come in at 940, 945, those zones. If the stock does pick up, then you could see 1,000 plus levels also. But I have a feeling that it could spend some time in this 1,000 to 940 range before it really moves higher.
Well, that was Kush's view on DLF and Chennai Petro. With that, let's slip into a short break and we'll address more of your queries post that.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of his stock-related queries then. And this one is coming in from Naresh, who's writing to us from Hyderabad. He has Nath Biosciences at a price of around 215 rupees per share. He wants to know what sort of a target can he look for this one, and should he stay put with this or look to exit? Kush, have you tracked this one, Nath Bioscience?
Is it Nath Biogenes by any chance?
Oh, I believe it's Biogenes. Yes, it's Biogenes.
Sure. Okay. So, sure, the stock's now turning a corner around. We've seen this sort of stock, attempt, an upswing for a while, then fail at the 200-day moving average. Now the structure turned positive. Even the momentum indicators have turned positive, and it's finally able to cross the 210 mark. So, from my perspective, you should continue to hold on to this one. There's a congestion zone near that 220, 225 mark. So perhaps it might spend some time there, but once that is taken out, you're looking at a 235 kind of a up move as well. So if you have an existing position, continue to hold. 235 is where the stock could head to. A stop on this one comes in at 205.
Muthuraman from Tamil Nadu, he has around 2 lakh shares of Moss Chip bought at a price of 500 rupees. He wants to know whether should he continue to hold or book profits on this counter. Rajesh, what would be your view here?
Book profit, I would say the numbers have been good, but not that exciting. I would say everything connected to semiconductor chips have gone up. The valuations have been stretched. Book some profits at this point of time. If it corrects by around 20%, you can re-enter. But at this point of time, it's a book profit.
It's coming from Anju, who's writing to us from Dubai. She has about 1,200 shares of SAIL, which she's purchased at around 160.2 rupees per share. Poonawalla FinCorp also, she has in a portfolio at a price of around 428 odd rupees. Wants to know whether she should average up both these counters at current levels or what sort of strategy she should use in these counters. Kush, what's your take coming in on both?
So continue to hold, SAIL being a metal stock, and we've spoken about it time and again, there's a fair bit of volatility that can come in. However, for now, the stock seems to be consolidating in a tight range. From my perspective, 145 is a strong support zone, so that should act as a near-term stop loss. Any rebound, is likely to take the stock to 155 to about, 160 kind of levels. So SAIL, you could stay put. Once the momentum kicks in, the stock could see higher levels also. Poonawalla, this stock's actually tested a lot of patience for a lot of investors. But if I hear it correctly, then the buying price is close to the current market price. Then you could continue to stay put. As I said, momentum is not the name of the game for this stock. So hold this one with a slightly deep stop loss of 410. As and when the stock starts to move higher, then you're looking at targets of 460 and a 485 as well. But that could take anywhere from 6 to 12 months, if not more.
The next query is from Namita, and it's on Suzlon and Samvardhana Motherson. She wants to know whether is it a good time to buy both these counters for short term. Kush, what would be your view here?
So, as far as Suzlon goes, there is a gap up that we had seen a while back, but the stock is consolidating around that. So for me, this gap perhaps needs to be filled. So wait for a dip. close to 50 to 52.5 should be a good entry point. Don't change this momentum on Suzlon just yet. As I said, closer to 50 to 52.5 is a good entry point. 50 should be a stop loss from there on. Then you're looking at 56 and a 58 as well from a near-term perspective. As far as Samvardhana Motherson goes, stellar run, but it's just put the stock out of reach for any kind of near-term trade. So for me, this is an avoid at the moment. You could look at buying it at a dip, and anywhere close to 175, 180 zones, perhaps is a good entry point. Right now, the stock's just, overheated across time frames.
All right, this one is coming from Preeti, who's writing to us from Kochi, and Preeti wants to know about Nykaa, whether she can go ahead and make a fresh entry in this particular counter. She's a long-term investor. Rajesh, what's your take coming in on Nykaa? Do you think that it makes sense to go ahead and buy this particular counter right now? No doubt, Nykaa also with the rest of the stocks did have a correction. Now, for the last 3 months, is trying to hold on to those gains of about 9% or so. What's your take?
See, if you're a long-term investor and have a good amount of risk appetite, yes, you can buy. It's the only company in the e-commerce space, I would say, which has been reporting positive numbers, although the numbers have been very small, but positive numbers since its listing. So that's one of the plus point. Plus, it has opened around 40 odd stores, 80 odd stores in 40 cities across the country, offline stores that are doing well. The only problem with this company is from the fashion retailing, which is not doing well, and they're putting it all on the numbers. But on a longer term basis, I think around 225 to 50 odd levels is quite possible in the next 1 year. So one can buy at dips, I would say. That would be a better strategy.
From Mr. Ramamurthy from Bahrain, and he wants to know whether it's a good time to invest in Cera Sanitaryware and CG Power. He has around 2 lakh rupees of capital. Rajesh, what would be your view here?
It's a good bet. The only problem with this company is volumes are very low. Going forward with the kind of traction we are witnessing in the real estate space, I think these real estate ancillary companies, be it sanitary ware, pipes, cement, are going to do well. One can go long on Cera.
Coming back to you, Rajesh, it's your favorite counter, and I think you already know which stock I'm going to talk to you, ask the query about. Has to be ITC, isn't it? We have Anand who's writing to us from Belgaum, and he wants to know whether which of the FMCG stock is looking attractive according to you, and particularly he's asking about ITC, whether he should make a fresh entry right now and hold the stock for the long term. Minimum is 2 years is what he's saying.
See, if it's a 2 years horizon, of course, ITC would be our first bet. We have been recommending this very long period of time, and still we feel that it has a long way to go. The company is doing extremely well, debt-free balance sheet, cash positive, number of new launches, they're moving into dairy business, management is good. So ITC would be our first bet. Second one would, of course, be Marico with the kind of product profile it has, the kind of numbers it has reported in the last few quarters had been quite exciting. So one can look at ITC and Marico as a first and second bet. And of course, Imami is trying to come out with better numbers going forward than this quarter numbers were also good. So one can even have a look at Imami too. The first one would be ITC, second Marico, third Imami.
Right, first call ITC, Imami and Marico is what Rajesh has to say. But let's kickstart with the rapid fire then. And Kush, coming first to you, Union Bank is a stock, 300 shares at 153 since the last 3 months. Krishna has been holding 1 year time frame. What should he do?
Continue to hold, stop loss at 133. Rebound could take the stock to 160 and 175 levels.
The next query is from Beena from Bangalore. She is holding 850 shares of Z, bought at a price of 215. Should she continue to hold or exit? Kush, what would be your view here?
Exit.
Okay, Sharmista wants to know about Happiest Mind, 842. She wants to know at the current levels, can she buy for the next 1 year? Will she make good profits? What's your take on this one, Rajesh?
Buy.
The next query is from Thomas George from Cochin. He has 1,000 shares of Canara Bank, bought at a price of 125. Should he continue to hold this counter, sell or buy more? Kush, what would be your view here?
Continue to hold, buy more close to 110 levels, and hold for 6 to 12 months.
Okay, Sanjeevi wants to know about UPL. Kush, she's already made an entry on this one. How's the outlook for the next 3 months?
Pretty choppy, but I think from a near-term perspective, you could look at a target of 595. A stop loss on this one comes in at 555.
The next query is from Vishwanath Nair from Cochin. He has 100 shares of Work Hard, bought at a price of 385. Rajesh, should he book profits here or continue to hold this counter?
Continue to hold.
All right, Nathik Agarwal from Kanpur wants to know about PNB. Is it a good time to go ahead and add Punjab National Bank, Kush?
Yes.
Well, staying with Bank, Chandrasekhar from Hyderabad has a query whether which is a better idea to buy Bank of India or State Bank of India. Rajesh?
State Bank of India would be a better bet. In the mid-cap space, Bank of Maharashtra is a better bet.
All right, this one is coming from Mohit. Has 500 shares of NMDC at 136. Also got NMDC Steel against the demerger. What's your take for the next 2 years? Stay put with both of them, Rajesh?
Stay put.
The next query is from Shrikant from Hyderabad and it's for you, Kush. He's holding 200 shares of Birlasoft. Should he book profit and add Wipro?
No, avoid Wipro, Birlasoft continue to hold.
All right, with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Rajesh, as well as Kush, for joining us on the show, giving us your take on the alcohol beverage space as a whole, as well as taking all of the stock-related queries. And with that, viewers, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Sumit. I will be continuing in for markets at noon and see you across the break.